To have you all on this live session, weekly Q&A here. Myself, Steve Gibbs, Barry Brooksby with me, and we're going to dive into your questions. We want to make this valuable to you. We put out to the community. We put out a request for questions, and we get a lot of responses. So we try to cover them. If you send a question, we'll try to cover it. For some reason, we don't. We'll try to hit it next time. So we're trying to do these every week. So let's dive right in. I think Barry, you and I talked about everything going on in the markets, and maybe that's a good way to kick it off.
Yeah, because people ask questions.
Yeah.
If I'm going to get into high cash value whole life insurance, does that mean I have to stop my 401k, stop my IRA, stop funding my brokerage account? Are you telling me I can't do or shouldn't do other investments? And no, we're not telling people that. But look at what's happening right now. The crypto market's dropping, financial markets are dropping. There's a lot of turmoil going on right now in the financial markets. What we're saying is to enhance your overall portfolio with something that's guaranteed, liquid, predictable, and that's where cash value whole life comes in. So, look, I've got money in the market, I've got money in crypto. I still diversify from that perspective. The problem, though, Steve, is people are looking at their future and primarily, right, just primarily people have Social Security and their 401k, and that's how they're planning for retirement. What's funny is I hear this every month, if not every week. Barry, I wish I would have done the cash value whole life 20 years ago. And for those people that wish they would have started it 20 years ago, well, the next best time to start is now. Get in now, start building the guaranteed growth of cash value, start planning for tax-free money. All those things come into play. But yeah, you see what's happening right now, and people begin to scramble. There's fear-based selling. They worry about their retirement. And what if you're a person that's planning to retire this year or next year, and you see the markets drop, your 401k dropping, your mutual funds dropping, your ETFs dropping? There is no security there. Again, we're not saying don't do that, but you should not have all your money there.
Yeah, and it's interesting times like this when we have some bizarreness happening in the markets. People naturally come back to a point where they go, "Man, I wish I had one of those cash value accounts." And a lot of times when it's just skyrocketing, you get the opposite. You get people, well, I can get a better return. So these times are just an example of how you need safe capital. You've got to have some kind of home base that's secure so that you're not getting rocked every time the markets are doing crazy things, which they are a little bit right now.
And I want to address retirement. Retirement became more popular when there were pensions and people with a life expectancy of 60 or 65. It was much different 100 years ago. And today, you think if you're the best at what you're doing and you're planning to retire, my personal feeling is why not continue doing what you're doing? Yeah, it's great to maybe retire, have some vacation time, but if you are good at what you do and you're valuable, you should consider still being an asset to the world, being an asset to whatever business you're involved with. I have no plans to retire. Maybe I'll slow down in my 70s or 80s. But Steve, I love what I do. I know you love what you do. So I take these like mini retirements, like longer vacations, or maybe I will take a few days off here and there and have more of a lifestyle that feels like I'm retired, but I'm still working full time. And I like that because one, mentally, I think it's super healthy. Working is healthy. Statistically, when people retire, the mortality rate goes up like it's crazy. It's like people that continue to work usually live longer lives. So there's that aspect, the mentality part of it.
Yeah.
But you're also, if you're planning for retirement in these market-based accounts we're talking about, and there's a lot of uncertainty and there's a lot of volatility, why not continue to have income coming into you from your own efforts? Could be residual income from real estate or investments, could be actual work, could be a company you own. Maybe you still own the company, but you're taking a smaller role in the company and you have someone coming in and working the company. But working is good, creating income is good, diversification in cash value whole life is good, along with the other investments that we're talking about. But retirement to some degree is a myth. Or maybe I should say it's not all that it's cracked up to be. And if your health is going to decline by you not working, keep working. Now look, there's some people out there that hate their jobs. Okay, I get that. But what about retiring from the job you hate and then getting involved with something you love, right? What if you were working in your passion? What if you were working and it didn't feel like work? I love coming into my office in the morning and crunching the emails and doing the illustrations and helping people financially. To me, that's exciting. It's powerful because, Steve, what we do for people, it's all guaranteed. No one will ever come work with us and lose money. It just doesn't happen. The insurance companies that we work with
Yeah.
provide contractual guarantees. Anyway,
Yeah.
I'm going off on some tangents here,
Yeah,
but
dude, you are really going off on a tangent, but it's
yeah.
it's all good. It's a good tangent, especially when we see wildness happening in the markets, the silver, the Bitcoin craziness that's going on. We talked last week a little bit about crypto with regard to our high cash value whole life engine. You talked a little bit about that. And we want to get to questions. We got a lot of people jumping on. If you do have questions, leave them in the chat. We'll try to address them during this session and see what we can do there. I have had a few estate planning questions lately. I've had questions about what we do, and somebody referred to it as an ecosystem, which I thought was really great. So you think about a financial ecosystem where we're trying to set people up from the standpoint of their strategy, which could include their documents, so they're strategic. It includes their financial efficiency, which you've been touching on, Barry, and the ability to have a system that supports what they want to do, right? The thing that they can rely on and fall back on, particularly in times like this. And then you have the third thing that often gets missed, which is the human piece, which is the human capital, or the personalities, the family members. So for people listening, we're trying to help people. And gets me excited, and I know you get excited about it too, Barry, is just helping people with all three of those. So they have a financial inefficiency that they're dealing with, right? And it could be that they have everything in 401ks or IRAs, or they don't have anything in guaranteed growing assets that are tax advantaged. We talk about the tax free bucket. It could be they have no documents whatsoever, and so then what happens? They're missing key components. It could be that they haven't paid any attention to what their values are as a family. So it could be that they've got some things kind of set up or at least in place, but they haven't taken a chance to think about and start getting intentional about what they want their loved ones to experience in life as well, and what their family values are, in life. So, you have all these things, and at a time like this, I mean, let's face it, if you had everything in a certain asset, maybe you had a ton of stuff, ton of money in Bitcoin or something, that would be threatening everything if that's all you had, right? So you want to be able to have true diversity and have your safe capital in a place that doesn't get rocked when you have wildness going on in the markets. If for a few reasons, one of them is peace of mind, but the other one is the stability of your family. So yeah, so we really are promoting a financial ecosystem right now, which is a system, or you can call it a wealth system, wealth building system. And so this isn't just a product. I know you talk to tons of people about this, right, Barry? It's not, you're not talking about a product. You're talking about a system and a strategy, and it needs to be designed you got to have something that is designed properly that can weather you through these storms. And so it seems to me this is a good time to talk about estate planning. You want to have a plan that doesn't get thrown down the tubes when you have wildness going on in the markets.
Yeah, and I love that you're talking about the family and human capital because we want to pass on those positive, abundant principles and traits that we've learned, that we've inherited, that we've grown into. That human capital is so important in family perpetuating wealth. So it's experience, it's education, it's knowledge, it's those principles that we've learned that we can teach our children, that we can teach our grandchildren, that they in turn will teach their children. And this is what some of the wealthy families throughout the United States for centuries have done. And the ones that have done it correctly, they've continued to prosper, they've continued to accumulate rather than spending down assets and thinking like I'm entitled to this money. It's I'm a fiduciary. I'm uh, kind of a steward of this money. How
Right.
can I see it grow? How can I help perpetuate family wealth? I still want to live a great lifestyle. You can have both, and there's a way to do that in what we talk about with the estate planning and then incorporating that with high cash value whole life insurance. I said this to someone probably 2 weeks ago, and I say it a few times a year, but I was really kind of on my game this particular day. And it's like, look, I've been in this industry now over 25 years. I've seen many, many different types of investments. I've never seen one product that does as much as whole life insurance does. We often talk about the top three benefits: guarantees, access to cash, tax free use of money. Those are amazing. But what about the other things that we don't talk about that can help your family with the estate planning, the
Right.
creditor protection, the bank collateralization, the living benefits, chronic, terminal, critical illness? I mean, Steve, this is one product that we're talking about that can help a family generationally over and over and over again. You add this to your estate, it's exploding the estate in a good way, in an abundant
Right.
way. Now you're teaching these principles to children and grandchildren. That's family perpetual wealth.
Well, yeah, and one issue I take with this discussion is I thought you were always on your game, Barry. So right there,
Oh,
but no, somebody asked me recently. This is a good segue. How is infinite banking good on from a legacy planning or just an estate planning? And so I had to walk through with that person, or got to walk through with that person, the increasing cash value idea of a properly designed policy, and how when you have a properly designed cash value policy, you have an increasing death benefit because that cash value is funding the death benefit. And so then over years and decades, potentially, your increasing death benefit is creating this massive amount of liquidity at death, which is huge from an estate planning standpoint because liquidity is a problem. If you have lots of assets and not much cash flowing, right, then you have no ability to pay bills, at debt, take care of business, settle the estate, whatever you need to do. Hopefully, you have a trust as well that you're using in tandem with that cash value policy. We talked a little bit about that last week. So if you have an infinite banking policy, and this could be for the average person listening, could be for a wealthy person, it's going to benefit a wealthy person, but it could be an average person that's spending consistently just funding an infinite banking high cash value policy over time, that is just a snowball effect that's happening in their estate. It's basically, if you're committed to it, then it's untouchable, right? So what it's doing is it's creating a momentum effect through your entire estate that is funding a legacy promoting generational wealth death benefit at the end. So you have this. So I agree with you, Barry. This, we call it the ultimate asset here. That bundle of benefits that you're talking about is really why we call it the ultimate asset. You have it doing a lot of different things. You have guaranteed growth, tax free. You have liquidity, the ability to leverage that asset you have living benefits, and then you have this cash value with a proper design. You have this cash value funding the death benefit, which is a legacy promoting machine. And then if you pair that with dynasty trust type protection, then what you've got is you've got a model that's for intentionality, right? That takes care of the people that are closest to you, your human capital, that promotes them then to the next generation. So what you really have then is you have financial, and you have health. You have a holistic approach to finances that you're just not going to be getting otherwise. And that becomes especially apparent. Do you think people that have high cash value, this is a question for you, Barry. People that have high cash value, whole life policies that are well funded and taken care of, do you think they care about what's going on as much right now? Maybe if they have tons of Bitcoin or something, but they're probably not as effective, um, or affected by what's going on compared to the average person that may be watching the markets with great concern.
Yeah, overall, that is true. And I've had text messages or phone calls come in to me from clients that say, I've got money in the market. I see the market falling. I'm so glad I have these cash value whole life policies with you because they never have to worry. Matter of fact, if the market's crashing, the cash value insurance policy is increasing in value because of that contractual guarantee. We want people to understand it is a contractual guarantee, but we also want people to be patient with the process. If you are an average person out there, family, income, and you're putting, let's say, $1,000 a month into a policy, 12,000 a year, it might take a little bit of time to build up some substantial cash value for a down payment on our home or to buy a business or whatever you might want to do. But imagine when you get to the point you're putting in that 12,000 a year and your cash value grows 15,000, or you put in the 12,000 and your cash value grows 20,000. Or what about, and we see this, you put in the 12,000 and your cash value grows 24,000, 30,000, and it happens, Steve. That's what's so cool is over time, because the time value of money and the compound interest, we see cash value growing by much more than a premium payment. So to those people, just be patient with the process, whether it's 1,000 a month or 2,000 a month. Now we compare that to someone that has greater wealth, they're earning more money. I've got clients putting in 100,000, 300,000, 500,000 plus a year into policies. They can take policy loans sooner and go invest in real estate or assets. But the same thing holds true, right? They might be buying larger priced property. They might be buying a larger priced business, so they might still have to wait too. But whether you're putting in 1,000 a month or 500,000 a year, all the benefits remain. You're still growing that money guaranteed. The cash is liquid. And Steve, I want to hit this for just a minute, which is tax free, because we talk about this often. Most people, when they get to retirement, are going to be dealing with Uncle Sam. Their 401k and IRA is 100% taxable. And most people, they're not thinking about this right now. And I'm wanting to have people stop, think about this. You get to retirement, all the money, all of it in your IRA and 401k, TSP, 457, 403b, whatever that is, whatever qualified plan you have, it's 100% taxable. Have you considered what that's going to mean to that amount of money? Because if you've got $1 million, it isn't all your money. Matter of fact, there's a little acronym that's on your statement that says FBO. You know what that acronym means? It means for benefit of. It's not your money. So when you take that money out, could be 20%, 30%, 40%, 50%. We don't know because we don't know what taxes will be 10, 20, 30 years from now, but it could be that percentage of tax, 10 to 40, 50%. We don't know. Why take the risk on all of your portfolio being subject to 100% taxes? We're saying have this asset in your portfolio where we teach you how to take all the gains, all the growth out 100% tax free. And Steve, what's so crazy about this conversation is when I ask people, 100% of them tell me they want tax-free buckets of money. But what's
Right.
strange is not many people have tax-free buckets of money. So there's got to be this epiphany for people. They got to say, look, I want tax-free money. Well, what am I doing today to get it? Because if you just keep doing the same thing you're doing now, you're never going to have the tax-free money if all your money is qualified money. So let there be a shock. Let there be an epiphany today. What do I have to do today to have
Yeah.
more tax-free money in my future?
Yeah, I mean that's a huge one. I'm kind of wanting to pivot a little bit here because I think we get comments and we get some of them are real annoying. I'm going to be honest, which is part for the course for being alive. But people seem to want to harp on quote salespeople all the time, and I just want to talk about that for a second. When somebody is passionate about what they do, and you're listening to them and they seem very committed to what they're doing and you dismiss them for being a salesperson, it seems to me that you might miss out on something that is a valuable nugget that you could take. And at I&E, and our whole team, right, Barry, we're very passionate about being trusted advisors. And before I did this, I was a trust and estates attorney. I guess I was selling trust at that point. So everything could be selling, right? Everything, and we kind of demonize all these people about selling, and it's just annoying. It's like,
Yeah.
I must run away. Somebody's saying it's like, well, go ahead and run, but you're going to run into another salesperson as soon as you go to a restaurant or go to your local whatever retailer. Everybody's selling. So
Yeah. I saw
uh,
a comment in either the last YouTube live or something we put out recently, and it was like, oh, are you trying to sell me an annuity? Like, well, one, did you even listen to what we were talking about? But two,
right,
if you're feeling that, look, ignorance will keep a person stuck where they're at. If that's the approach that a person wants to take of you're just selling me something and you never learn, you're going to stay stuck where you're at.
right,
Ignorance does no one any good. So what we're offering and what we're very good at Insurance and Estates, especially Steve and Jason, the content and the education that they put out for free, it's beyond remarkable. I don't know of another
right.
group doing this. So you want to search different topics. Look, get educated. Don't just dismiss something because you think we're trying to sell you something. It is true. We're very passionate about what we do. And with 25 plus years in the industry, I have some experience. So you should take at least something that we say seriously, but in the end, look, we're simply wanting to get to truth, and you can get to truth too. Go get educated. And if
Yeah,
you're a cynic or you're a skeptic, you're going to just stay ignorant. And that's
right,
unfortunate. We're here trying to educate people, and there are plenty
right.
of resources and source material that we can use backing up what we say that's not just our opinion. Third party data coming
Yeah.
from all over the place that will back up what we're saying.
Well, truth, and I love it. We're in a time where people don't know what to believe. Why don't you believe the almost 300 Trustpilot reviews on our site? That's at InsuranceandEstates.com. A lot of those are your reviews, Barry. So people should go look that up. If and you can't, there's this cynicism toward hardworking, free.
Steve, you still there? Steve might have a technical glitch. Steve?
We're back. I hope that didn't.
Yeah.
It may have.
So I can't hear you as well. So something happened, but let's just stay live. Okay. We'll
Yeah,
wrap this up in a minute because I can't really hear you.
yeah.
But
So
go
we
ahead
were
and wrap up with the truth telling and what we want to help people with.
okay. You can't hear me now.
Barely. Well, you're coming through. It's just the whatever glitch just happened. My
Yeah.
phone shifted over to the earpiece instead of the actual speaker. So I
Okay.
think you're being recorded, but we'll go ahead and wrap up. But I do think people can hear you. I just can't hear you as well.
Yeah. So we were just touching on sort of this, hey, what are you trying to sell me idea? And to wrap up that thought, just be open. There's a lot of things that probably both Barry and I could be doing to be making more money if all we cared about was selling. So This is a passion, a commitment that started with me being a trust and estate attorney and connecting with Barry and other like-minded people to be trusted advisors. And I just want to make that point that people should understand this is a passion and a commitment. So,
Yeah, awesome. Well, we'll plan on going live next week. So people have questions, they can send them over. We encourage you to go to the Insurance and Estates website, InsuranceandEstates.com, and also look at the blog there because you can go to the blog, you can type in nearly any subject relative to insurance or financial investments and get answers. And then also the YouTube channel, a lot of videos, a lot of podcasts, a lot of content, but
yep.
definitely appreciate everyone jumping on.
Yep. Appreciate you jumping on. We'll be trying to do these every week. Thanks so much for joining us. Sorry for the glitch today. Very good thoughts as always. Appreciate you all, and we'll see you in the next one.